Hello traders, Gary Wagner for Trending Markets, approximately 10:30 in Honolulu, 4:30 in New York on Wednesday, the 22nd day of July, 2015. We have oil returning to its downward stance, trading off about $1.72 on the day, 49.14. We've been talking about weakness in the market. We've been talking about it for quite some time, but we haven't actually taken a stab at the market. I am going to issue an actual recommendation at this point in which I believe we should be getting short this market. It is trading, as I said, roughly at 49 and change, 49.19. In terms of an upper level stop, you're going to want to place it above about $53 per barrel. And in terms of our downside target or our exit target, my target right now is about 46.50. So I will issue a special trade alert on that, but I am recommending that we do sell crude oil at the market at best available price. Interestingly enough, after a pretty dramatic downside day, this is yesterday's activity in the dollar on our daily chart, we do have a nice uptick, not that strong, but still up about 16 points at 97.49. We know that we have some real resistance in the market just above 98 on the dollar index. And if in fact we see this market move back up, I would really like to see, or need to see it actually, break above 98, and then I think we're headed to 100. If we find resistance here again, we could oscillate within this particular price range. For that reason, my recommendation is to remain flat with no active trades in the US dollar. Euro dollar, another market that we have been following. Again, when we take a look at this particular market from our daily chart, just the mirror opposite of what we saw yesterday. Look at this dramatic up day that we saw in the euro. But what is really jumping out at me is we are trading lower. We have this downward sloping channel. We are trading lower, but we're trading within the confines of this particular channel. We've now gone to the top of this channel. So I would look for some weakness to come into the market, trading back to the bottom of this channel. Now, if there's any play to be made here, it would be from the short side, but I would feel much more comfortable in terms of playing the short because of the way this range has been moving and the fact that we're back at around 109. I would like to see it break below this particular channel line. That would be at around 107.5. That would mean that we went to the bottom of the channel and actually went through. We are going to sideline on the euro, but as I say, my disposition on this market is lower euro, higher dollar. Now, with all this turmoil that we are noticing in other markets, when we go to our equities markets, they were down, but down ever so slightly. Dow Jones Industrial Average off about 68 points, 17,851. But what is more noticeable or more prevalent than anything else is really this top or ceiling that we have had near these highs. We have not been able to break above them. And if you consider the fact that for the better part of 2015, we have been trading in a range between 17,500 and 18,500. So we've been kind of really range locked within this particular price point, and we have not seen the market even attempt to take out the most recent record highs and attempt to breach them, obviously. So we are sidelined on the Standard & Poor's as well as the mini NASDAQ. We are recommending going short crude oil, and we are going to sideline on the two currencies that we've been following, euro dollar and US dollar. But I do believe that a trend is developing, lower euro, higher dollar, and that's something that we'll probably implement, if not at the end of this week, the beginning of next. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the daily update and review. Bye-bye.